Good morning and welcome to the Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors and this is not financial advice. We'll jump onto the charts in a minute. So we have a contraction model where London is pretty much inside of Asia. And usually in this model, we'll see price take out both sides. We've obviously had a huge drop sweeping London and Asia. And now we are on our way up. We have a green box, still waiting for confirmation. We're still under the 238. Excuse me. We're bullish on the higher time frames. 1 minute is bullish. We want to wait for 5 and 15 to confirm. So we look at US 500. Slight downside expansion, but we do have, see, this is more of a downside expansion as London is respecting all of Asia's levels right here, the Asia fair value gap. Excuse me. Sorry, I'm just recovering from a cold. Please bear with me. So no confirmation yet, and again, we do have 6 other assets that we have set alerts on, so as soon as we get a confirmation on any of those, we'll jump over, but we're pretty close here. It's got to get over the 238 and go go green, at least on the 5, for us to have a bias to the upside. Just patiently waiting. No other confirmations yet. Again, we're right at that 238. So London gave us a bearish confirmation. We had a retracement right into, so let's see if that's just Asia's fair value gap or if London actually created one as well. I don't think London had. It was a little too tight of a range. London didn't actually form its own fair value gap. So we tapped right into Asia's, and then we dropped to 2.5 standard, past 2.5 standard deviations before gesticulating, coming back, and then doing another drop later. This would have been the main one that we would have focused in on, as it was within 1 hour of the range formation. Let's check out Asia. Asia gave us a bullish confirmation, retracement to the 20 EMA, and then we got how many standard deviations here? And again, this was within 1 hour as well, so we would have taken this 1 point, almost 2 standard deviations on Asia. And excuse me, still waiting for confirmation on New York. So our 5 minutes already turned green on US 500. We're above the 238. Since these markets are supposed to be working together in unison, this is a good sign that we might just pull up with it. Still no confirmation here either, but a lot closer to taking out London highs. So again, they've paused the market here at the 238 to build up more liquidity. There are people that are going short here, and others that are waiting to get above this to go long. Now US 500, we could just sweep London highs and then push down, therefore giving cadence to this rejection off the 238. That's why it's important to wait for confirmation. No other confirmations yet. So we did have a news drop today. So this is FOMC week, non-farm employment change. That's on Friday. So anytime we have, excuse me, a big news drop on Fridays, we usually just trade Monday, Tuesday, and we're very leery on Wednesday. There was news drop today at 8:15 and 8:30 Eastern Standard. And at 10 and 10:30, crude oil inventories. So tomorrow we will be focusing on a different market, just for safety purposes. So make sure you're subscribed to some kind of calendar, like economic calendar. We use Forex Factory. You can use anything. And then the red folders are the ones you want to avoid, and then we go into specifics of which ones to avoid on in the Learning Hub, because our probabilities are decreased that day, so best to just avoid. Again, still just waiting for confirmation. I want to see if we get over this 238 and push to the upside, which is most likely on a day like this. US 500 already above that 238, still waiting for that confirmation. So we're seeing the divergence here. As we're back into London range here. We're above the 238, but we're under the 238 here. We've already had a cross up on 1 and 5, and yet the 5 has not crossed over fully yet. Ideally, we would like to see this move to the upside though. That way we'd be on trend, sticking to the 4-hour and the daily. Green box, just need a green confirmation here. Let's see if we can't get it on this, this candle or the next. Pushing back down. So there's no fair value gaps in this area. The only main one is the actual New York fair value gap. And the 20 is well above that. So again, this can be looked at as an early retracement. If we tap the 20 and then we get the bullish confirmation, then we can use whatever fair value gap is presented. So remember guys, this is probably one of the most highly back-tested strategies, and we have all the aggregate to prove it. Just got to go to fractaleffects.com. Once you sign up and you look at the dashboard, it literally shows you over the last 20 years what this market did. And it breaks it all down to like Mondays, Tuesdays, Wednesdays, Thursdays. Each session, London, Asia, New York, lets you know exactly what it's been doing and works out the averages for you. So as soon as we get a confirmation, the reason we wait for that confirmation is there's a 75 to 80% chance that the bottom of this range will not be broken once we get a bullish confirmation for the remainder of the session. As you can see, same thing here for London. We got a bearish confirmation. It did not break the top during that entire session. So once you know that, then you can feel comfortable at least taking trades in the direction of the confirmation and to the standard deviations that have like already been worked out for you on the dashboard, on the spotlight dashboard. Shows you how many standard deviations it's done on every Wednesday for the last 20 years. Let's take a look at Asia. Asia again, even though it did give us our move, our retracement, our confirmation retracement and extension, it did break the range. So even though we would have been out by here, by 1 to 1.5 standard deviations, this is still considered a false day, as there was a 75 to 80% chance that it would not break the bottom of this range, and it did. But as simple as that. So once we have that confirmation, now our probabilities go up. We know that we don't have to fear it breaking the bottom. Then we just start looking for our entry, and we know that these are the key areas of interest right here. For example, New York fair value gap, the Fibonacci that we drop in here. Oops, sorry. So again, we get our early retracement to the 20. Right now the 20 is above the 30%, which means it's extremely bullish. Even the New York fair value gap is above 50, extremely bullish, which in itself is a good sign. We just want to see the right moves now. We want to see a rejection off the 20, bullish confirmation, and a fair value gap above here. Otherwise, the only other actual meaningful fair value gap is right here. Still no confirmations across any other asset, so just waiting. Now we're moving down, hitting that 20. It's officially a early retracement. US 500, we want to see, does it bounce now off the 238 and the 20 crossover and push to the upside. So now we're just going to see if US 500 pulls this up, pulls NAS up with it, or if NAS pulls US 500 down with it. At 238, that's what we want to see. Is it going to reject or bounce? Is it going to pull or push? Ideally, I'd like to see it even tap the New York fair value gap wick and close above 20. That'll be in more alignment with our bias, because right now we have a daily bias, which is bullish, and to stay on trend, we'd like to also have the 5-minute turn green, which it has over here in US 500, and then pull this market up. I want to take out these highs. And who knows, maybe even break all-time highs today. Actually, not that far. All-time highs are at 27.68. Could mark that off here actually. 27, 6, 8. Pretty much in that area. That would be an all-time high for the NAS. Now keep in mind this is election month. There's a lot of manipulation that happens during this time. They like to pump the markets up right ahead of the elections. So right at the 20 again. Deeper we dig here and bounce off and we get that bullish confirmation, I'll be more satisfied knowing that we have actually gone close to 50. US 500 still at that 238. Still just waiting and watching for that one. So we're at the New York Fair Value Gap now. Let's see if we dig a little deeper, or if we get a rejection. If we get a rejection off of this candle wick, but the candle body closes above the 20, then I want to see that next candle engulf this one, and most likely get our bullish confirmation or our bullish push. But until then, I'm just going to wait. Still no confirmation on any other asset. Digging digging even deeper. Heading towards that 50, that's what we want to see. US 500, now below the 238, right back at that crossover. I want to see if it bounces off this, or if it continues down further. 2 minutes left in this candle. More than enough time for it to tap its levels here and push back up. We'll see. Still no confirmation. Still just waiting patiently. Getting some rejection now. Digging in even a little bit deeper. 32 seconds. Obviously we're going to close below this fair value gap. Let's see if it uses the consequence encroachment of this fair value gap to push down, or if it's going to push up from here. And this is why we wait, guys. So many people got FOMO right here. Jumped in, thinking it was going to break the top. We get a turnaround immediately. Probably blew out their stop loss if they put one in place. Please check out one of the latest posts we put up on Instagram about stop losses. So many people trade without stop losses. They have this fear that they specifically are being, their stops are being hunted. Doesn't work like that. Stops are obviously hunted specifically at certain levels. And in order to avoid that, you just have to make sure you're calculating your stops correctly. That's about it. But never trade without a stop. And if you're that fearful, make sure you're at least ready to stop it out manually. If you're afraid that somebody, some all-seeing eye, knows exactly where your stop is, and they're hunting your stop specifically, then just do it manually. Kind of like what we do here, we put in a mark. Let's say your stop's right here. You don't want to actually apply your stop, that's fine, but as soon as a candle crosses here, just close it off manually. So this is the kind of rejection we wanted to see. We closed right below the New York Fair Value Gap, and the next candle brought us all the way back up. Now I want to see this candle close above the 20. We didn't get the wick we wanted, but if we get this engulfing candle, if this closes above, then we're most likely pushing up to get that confirmation. 3 minutes left. Could do a lot. It could bounce off this 20 and just continue pushing down too. That's why it's important to wait. We're still red. Still red on the 1, the 5, and the 15. We are getting that same bounce off the 20 and the 50. And we're back above the 238 on US 500. But still 2 minutes, 39 seconds left. We want to see this candle close above this range to show us that this market actually wants to continue up. So we're just patiently waiting. But so far it's looking good. But this thing has to look obvious. We want the dealer to show us their hand inadvertently. They're not going to do it on purpose. But we wait for these telltale signs. Engulfing candle. Because we've already dropped enough now. We came close to the 50. We did our early retracement back to the New York Fair Value Gap. Now, if we get a bullish confirmation, we can be confident that the probabilities are going to be high that once we have another fair value gap presented, that it will push us up. And we'll go about 1 standard deviations, or at least I would aim for the top of, because 1 standard deviation, that's a pretty big range today. We'd like to be out by 9. So as soon as we get a confirmation, I want to see how many standard deviation it is. Standard deviations it is to this line about, just eyeballing it, probably 0.5. Just want to see if we get our 1 to 3 though. 1 minute, 15 seconds left. So we're getting a pullback now from that 20. 12 seconds left. We might just close under this fair value gap, we'll see. So we have a confirmation on oil now. We're going to jump over on this one. Excuse me. So we're already at 0.5 standard deviations. We gesticulated, did an early retracement. So oil's going to most likely push. We are counter trend trading. Daily in the 4-hour is bearish. I just want to see if the model matches up. We do have an upside expansion model. So far, so good. I want to see if this fair value gap stays open. And this would be our area of interest. With these highs here being the target. But again, keep in mind this is a counter trend trade. Three minutes, 42 seconds left. I need to see this fair value gap stay open. There's no other fair value gaps that have even been created. And we want to make sure we have a room too. Just paint this out. Obviously it's not fully formed yet, so we got to make sure that we adjust it once this candle closes, but I just want to see if there even is room here. It's kind of a tight range. Remember, during all these live sessions, we're only going for the low-hanging fruit, which is 1 standard deviation. So if the juice has already been squeezed, we're not going to go back in, but we'll go top range here. And our stop would be so we're technically under 3 standard deviations. Just want to see if we take it to the top of that wick. Will that give us our 3? That'll give us our 3. Oh, there. And then so there's our 2 standard deviation. Again, just waiting still. Back on NAS, we closed actually above the New York Fair Value gap. This candle's now trying to push up, trying to get over the 20. But we're still red across the board here. And we're green across the board here on the lower time frames. Again, that fair value gap now decreasing in size. Until that candle is fully formed, we don't even know if we have a fair value gap. I'm just adjusting it just for levels. But we've had our early retracement. We do have an upside expansion model. And crude oil inventories has already dropped that news right here. So it gave us that spike. When you're trading crude oil, that's the only real news you want to kind of keep your eye on, crude oil inventories. They'll give you a spike. So we have 30 seconds left in this candle. Keep in mind this is a counter trend trade, not one of my favorites, a little lower probability, but we do have all the signs. Well above that 238, the crossover, upside expansion model. Okay, so there's our fair value gap. It's been formed. Excuse me. Could be watching this market, obviously, on all time frames. Now, if it leaves without us, it leaves without us, but we need it to see at least come in and tap one of our PD arrays. Need oil to come in and tap that fair value gap. And we'll look for a possible entry. But again, if it's too bullish, it'll leave without us. And we wait for it to tap these levels so we know where to put our stop loss. That's called an anchored trade. It's anchored to something. It's anchored to this fair value gap as our entry. It's anchored to this stop loss where we know when to cut it loose. And it's anchored to this take profit because we know where it's going. If I jump in here, that's not a 1 to 3 at all. Right? This is where people with FOMO jump in. Could it still push from here? Yeah, it can, but probabilities are lower and you're not anchored. If this turns around on you and it hits your stop loss, you lost more than 1 to 3. This was most likely a 2, if not a 1 to 1 actually. It's ridiculous, risking $1 to make $1. NAS, on the other hand, we're still bearish on lower time frames. Still bouncing off the New York fair value gap. No confirmation. Again, if oil already hits that green line, and the juice has already been squeezed, which is fine too. Still just waiting. Nothing of interest yet. This market is way too bullish to catch. It's like catching a runaway train. There's no point. It doesn't pull into your station. It doesn't pull in here, at least give us some kind of sign. There's no point in catching it. There's no way of catching it. Anybody who jumps in here is trying to jump onto a runaway freight train. It's dangerous. You get hurt. And you got no one to blame but yourself. Now we are adding some more videos, most likely to our YouTube, about meditation. Remember, this can be um, a very stressful job. You want to make sure you're, one, fully educated and you know exactly what to do. Two, you're managing your money and you're making sure your risk to reward is exactly how it should be. Three, patience. Got to be calm. That's how you avoid moments like FOMO. But meditation is key. Meditation before bed, meditation in the morning. It's about creating a mindset. Successful traders uh, know exactly what to look for, but then also they know how to handle it, how to handle the stress. We just put up a post on Instagram about what day trading does to the brain, your cortisol levels, your stress levels, your fear levels. See what I mean about runaway trade? This is the only fair value gap that was even created. There was no New York fair value gap. So for it to just keep going up without even touching the only fair value gap, they didn't want you to jump in. Now we could still get a turnaround here. There's no fair value gaps presented here either. Until it comes back down, touches this, bounces off that 20 now. That 20 is almost inside of our fair value gap. Until it does that, this market is not interesting to me. And that's the thing. There is such a thing as a too bullish of a market or too bearish of a market. If it's too anything, again, that's the runaway freight train. You can't catch it. Look at the TDI down here. We're already into the red. That's overbought. When you have a bearish market and you're overbought, that's when the reversal can happen. Still just waiting. No other confirmations have gone off across any of our assets. We're watching them all. US 30, NAS, US 500. We even have Bitcoin, a few of the Forexes, oil. This is the only confirmation we got so far, so we're not missing anything. NAS still continuing to drop below New York's fair value gap at 50% now. Oil going strong, bang. Juice has been squeezed. It's the candle bodies I wanted to aim for. Still going strong. And again, this is fine. You can't feel bad about this. It did not give us an entry. It never pulled into our station. It didn't want to. Well, you're not Nostradamus. We're high probability day traders. The highest probability was right here. As soon as we get a confirmation, there's a 75% chance that it will retrace back into our range and tap one of our key levels. It did not do that. So why would we feel bad about it? Especially now that we have all these alerts set up. We'll just wait for the next alert on whatever asset that pops off on. We still have about 15 minutes to find another high probability trade setup. This was a good one. Again, I just wish it had come in. I was not going to attempt to jump in here. That's not a 1 to 3. Our stop loss would have been way down here. Didn't hit our key levels, didn't retrace. Now the higher probability trade setups are the ones where we retrace back into the range. So after confirmation, this next candle never even touched the top of our dealing range, which is right here, this gray line. Didn't touch any of our key levels. Still going strong. So now that it's created another fair value gap, it could just tap this and keep going, but again, we're not interested at this point. Just going to move this up just to see it once it takes out this high. I'll most likely go to 2 standard deviations, but anyway, still just waiting for another confirmation. NAS now all the way to 61%. In the top of our dealing range. And NAS could just push all the way down through here. This is what we're going to be able to, it's either going to bounce from 61% on the top of the weekly range, push up, or we're going to bounce off the bottom of this, continue down, get our bearish confirmation. Still going strong. 51 seconds left for this candle close. We'll most likely take these highs now. There you go. So yeah, unfortunately the juice has been fully squeezed from here, which is fine. Still waiting to see what happens in NAS and any other asset. So now we're well past overbought on oil, all the way at the top of the range itself. They've already swept all this liquidity. We are still bearish on a higher time frame. This thing could just drop right through the floor now. So that was the move, was from here to here. But obviously that's done now. Another fair value gap's been presented here. Could just tap this and keep going, but again, not interested at this point. We're only 9 minutes away from our 11:30 mark. I'd rather wait and see if we get another confirmation. Just wanted to watch this, but again, still just waiting. Still no confirmation. If this candle closes without even making any retracement here, just another sign of how bullish this market really is. Nas now trying to get back over that New York fair value gap. About 7 minutes away. We're either going to see Nas bounce off that 20 and off that New York fair value gap again to just go short, or we're going to get over and go long. We get our actual bullish confirmation, but it's almost looking more like we might push down. We'll just have to wait and see. Oil, again, pushing strong. 1 minute left in this candle closure. We'll most likely not even return to this fair value gap, but it just goes to show you this became a breakaway gap. And then this will become a breakaway gap too, most likely, as it keeps pushing up. Oil still on a tear. 5 minutes left. We're now back above the New York Fair Value gap. Still no confirmation across any other asset. Again, it's that kind of a week with a big news drop on Friday. Some of these markets are constricted. Just waiting for that drop to reprice. That news drop, I meant. NAS finally closing over the New York Fair Value gap. Trying to get over 20. But again, we're still red across the board. The only thing that'll change this bias now is a bullish confirmation and at least the 5 turning green, 1 in the 5. NAS finally doing this push up. You'd have to get above the 238. Three minutes left in our stream. Oil's a runaway freight train. We didn't catch that. No other confirmation. Again, it's because of Friday's news. NAS back at the 50. We'll see what it does here if it gets over that. No other confirmations across any other assets yet, so we're not missing anything. Yeah, across 6 assets, oil was the only one that confirmed, actually. That means none of the other assets have actually broken their range at all, just consolidation. NAS looks like it's going for it. Only 2 minutes left. I'm not sure we'll get that confirmation in time. We'll continue to watch it for a few minutes here, but make sure you do check us out on fractaleffects.com, where we teach high probability trading using 20 years of algorithmic data. Please subscribe to our channel, hit the notification so you know when we're live. We're live Tuesday, Wednesdays, and Thursdays. And if there ever is a disruption and you don't see us online, please just check us out on our Instagram, fractal.effects, and you can check our story and we'll have all the updates there. Still got a couple of minutes left. Excuse me. Look at all the breakaway. That's a breakaway gap now. That's a breakaway gap now. Oil had no intention of letting anybody in. This is how you prevent FOMO, though. Stick to your rules. Doesn't look like we're going to get that confirmation in time. We're already at 11:30. So again, thanks for joining us today. We will be live again tomorrow. Have a good rest of the day. Take care.